Patrick has identified these diamonds in the rough, so to speak, that we're interviewing today, and one such group is Cardinal Energy. Now, Cardinal Energy, still exploration. Is there a theme here with you? Or are you trying
American Energy and Resources?
Are you trying to tell me something though that
American Energy and Resources?
That you're going for commodities, you're going for energy. You think that's where the next play is going to be?
I think definitively anything that has to do with American Energy and Resources, the Bakken region, the Bakken shales. That's a security issue now. It's also a question of monetizing one of America's great resources, oil and gas, that we weren't able to do like 10 years ago because we didn't have the technology to be able to do so. Now we've got the ability to be able to do it, and horizontal pinnate drilling, that kind of thing. And I think these plays they're definitive short-term and long-term plays. And
I'll tell you, and Patrick Howell, there's the tip of the spear for you. He's the guy that's in the front talking to these companies every day. One such company that he brought to us today, Timothy Crawford, is the CEO of Cardinal Energy. Their stock symbol is CEGX. You can go to cardinalenergygroup.com, cardinalenergygroup.com. Timothy, are you with us online?
I am.
There you go, Timothy. Thanks for stopping by today. First of all, as Patrick said, there is a trend going on here where you guys are back in vogue. Does it feel good to be back in the top 10% of U.S. companies, at least in your industry?
It absolutely does. And we do a little bit something a little bit different at Cardinal compared to some of the large shale plays that a lot of the people aren't real familiar with. But we've been really focusing on going into some of these older fields wells that they're considered stripper wells, going back into these fields that have been in the wells that have been neglected or walked away from, and using some of the newer production theories and techniques.
Sure.
We're able to rework these wells and further develop the fields.
It's interesting when you now, are we talking about, for example, Tim, capped wells, for example, or is it heavy oil?
These are wells. Typically, we've started here in the Appalachian Basin. These are wells that typically were drilled in the 70s or 80s. A lot of these wells were drilled primarily for the tax write-off back in the 70s. For every dollar that you invested in a well, you could have a $2 write-off. As those disappeared, a lot of these wells, they tried to produce as quickly as they possibly could. And it's very similar to like an aerosol can. When you turn it upside down and spray it, you still have a lot of the liquid left. So we find that a lot of these fields, that there's still a lot of the commodity left in the ground, and a lot of people don't realize that these quote stripper wells, which are wells that produce 15 barrels of crude oil or less, that the marginal wells produce more than 300 million barrels of oil in the United States. And to give you an idea of what that means,
well, stand by. Hang on one second,
Tim. That's equivalent to about 60% of the crude oil that we import from Saudi Arabia.
Well, think about that. He's talking about remnant oil here. He's talking about stuff we didn't anticipate getting. Tim Crawford is the CEO of Cardinal Energy. CEGX is their stock symbol. CardinalEnergyGroup.com is their website. More from Tim after the break. Big Biz Show, BigBizShow.com. Timothy Crawford is the CEO of Cardinal Energy. CEGX is their stock symbol. CardinalEnergyGroup.com is their website. We've been talking to him. Timothy, I have to ask you, how has the commodities business, how has the exploration business all changed in the last 5 years as the rest of the economy is slogging along? Have you guys had to struggle with has your industry as a whole struggled like the rest of us, or have you guys seen this as an opportunity?
For us, it's actually been an opportunity. Some of the large companies and some of the mid-majors, as natural gas prices climbed and oil prices climbed to 140 a barrel, a lot of the larger companies got over-leveraged. And as the prices came back down, had to find other ways to raise capital. For us, it's really given us an opportunity to look at some of the fields that they may have looked at in the past, to come in and really make a play for these, to pick up some of these fields that they've had to walk away from. And it's really given us a really great opportunity right now, and I think for all small oil and natural gas producers.
The one thing I find that's interesting about your website, and by the way, the website CardinalEnergyGroup.com, and again, their stock symbol CEGX. That's C as in Charlie, E as in Echo, G as in Giraffe, and X-ray, CEGX. is the fact that you guys are talking about reworking, and this is your words, and I love this, reworking marginal oil and gas wells. And what that means is you're going back in and lighting the candle on some of the stuff that is either been stagnant or abandoned or otherwise, correct?
Exactly. A lot of times you'll find 60 to 70% of the commodity still in the ground. And a lot of these fields, were drilled in the 70s or the 80s. And because just the technology back then was not as advanced as it is today, we're able to go back in, rework these wells through different production methods. It could be using something fairly new out there that's called the gas gun that will allow us to go back in and reopen that formation up and to get the commodity out.
So
these are wells that produce significant amounts of oil. They typically are going to be producing, 15, 20 barrel a day. But for a company our size, we don't have large overheads like the majors do, where they're looking for wells that are producing 500 barrel or more a day. For us, with our overhead, we're able to really take advantage of these marginal type wells and continue to produce them.
Hey, Tim, I got a question for you. So with respect to that, one of the concerns that you guys have to have is the energy cost in reworking these wells. So in other words, you mentioned the gas gun. I know there's been water technologies. I know that there's been a microwave technology that's been floating out there to try to reactivate these things. How do you guys assess that when you go in? Because that's got to be part of your assessment issue whether you want to take over a well, correct?
Well, actually, as we go in, because some of these wells can't be reworked, but what we're able to do then, typically we will go in and take the pump jacks off, pull the sucker rods out, and we'll run a logging tool to see what hydrocarbons are still left there in the formation. And if it doesn't look like it's going to be economically feasible for us, we then can take the equipment that's on site and actually sell it then, or use it on another well. And then we have to go in and plug those wells. But, typically we're at a break even. So these wells makes a lot of sense for us to go in to rework them. The ones we can't, we're going to take the equipment that we can take, the pump jacks. You can actually take some of the pipe out of the ground because it's been preserved. And it can be sold as used equipment. And it's sold, and then we're able to pay for the cost of plugging that particular well. And at that point, it's a break even for us. But where we really go ahead.
Well, I guess the question for me is because it's a no lose situation for you guys under those circumstances. Now I guess the next obvious question is to talk to us about the areas of operation. I understand that there is the San Joaquin Valley in California. I understand there's the Bakken oil fields that are brand new. I understand that there's places in Texas yet to be discovered or rediscovered. Of those areas, where are you guys focusing right now?
Right now, we have primarily focused in the area that's called the Appalachian Basin, but we do have a 657-acre field in Colusa County, California.
That's by Sacramento, right?
That we've got a couple deep natural gas wells, but really starting to focus primarily in the mid-continent, which is Kansas, Oklahoma area, areas that still have significant reserves. Smaller fields that we're able to go in to acquire with existing wells and, really develop that field where we're able to put more wells on that particular field to grow our portfolio.
I love the play, and Timothy, I want to have you back with us. Timothy Crawford is the CEO of Cardinal Energy. Cardinal Energy, stock symbol CEGX, and CardinalEnergyGroup.com. I can tell you this: if in terms of capped wells, in terms of reworking wells, there are as many wells to be reworked as there are wells to be discovered. And if you follow a company like this, and once again, I want to encourage you to go to their website, CardinalEnergyGroup.com.
Timothy's going to be back here in the studio in July.
Yeah, good. So we'll get him back here, and we'll actually I want to talk to him before then because this is interesting. I want to get him back on the phone.